So earnings kicked off and we started to see a lot of these stocks come in lower with the weak guidance, weak forward guidance, talking about the weakness in the consumers. We heard from Airbnb talk about how they are seeing weak US consumers. The stock plunged more than 10%. We saw SMCI also drop heavily on weak earnings. We're hearing from a lot of companies out there talk about that the consumer is weak and they expect forward guidance, future guidance to be weaker. We also see them starting to talk about that they are thinking or planning or doing already. They're lowering their prices to try to meet the consumer somewhere because of how weak they're getting. And what's interesting in all of this is that we're seeing the weakness from the consumer side. We're seeing that the companies out there starting to talk about lower prices. And we're starting to see this lag effect of all the rate hikes that we've encountered starting to take place now. Now we're hearing about rate cuts, potential rate cuts in the US. We could see a 50 basis point rate cut in September after we saw quite the sell-off on the past week or two. We heard from certain Fed members like Bowman saying that we have to be cautious with the rate cuts. We shouldn't be, too early in terms of cutting aggressively or doing any kind of emergency rate cuts that could, potentially cause a bid in the equity markets. But what's the problem here is that people think that when they start cutting rates, even if they just do one 25 basis point rate cut, that all of a sudden you're going to see the economy improve. You have maybe some companies out there also start to factor that into their decision making when it comes to hiring workers. A lot of them are saying that they're not hiring workers. They're holding, the recruitment process. It's on standstill because we want to see where rate cuts, when they come and how that will affect the consumers. But what's funny is that if all those rate hikes that happened in the past has a lag effect and we're seeing the effects of it now, why do you think that the rate cuts, all of a sudden rate cuts now is going to cause the markets to go up and cause the economy to do better? Don't get me wrong, it will have an effect, but again, there's a lag effect. If there's a lag effect in terms of hiking rates, there will be a lag effect in terms of cutting rates as well. And just one 25 basis point rate cut or two rate cuts or three rate cuts is not going to be enough, especially if the consumers are getting weaker and weaker and jobs are on standstill or there's layoffs happening, like for example Cisco doing a second round of layoffs. So what's going to be important here is to assess how this rate cut comes in. When does it come? We're going to hear from the Fed in September. We're going to hear in the Jackson Hole event as well what the Fed has to say. Are they going to continue to be on the hawkish side, dovish side? We have markets and traders pricing in a 50 basis point rate cut in September, but I think we'll get maybe a 25 basis point rate cut unless something crazy or drastic happens before then. But with those rate cuts, it always coincides with some sort of deterioration in the economy. We've seen that back during COVID's time, during the 2008 crisis, the real estate crisis, 2001 dot-com bubble being bursted. When we start to get those rate cuts, yes, the equity markets temporarily bounced up and there was a bid, but it later led to the equity markets completely crashing and plunging. And with the scenario that we saw past a week or two ago, where the VIX spiked up to 65 and the stock market plunging, and now to just reverse half that move so far, it doesn't mean we're out of the woods. And the markets always acts in this way. It's never going to be easy for anyone who's bearish or trying to short the markets here. There are going to be squeezes. There's going to be tough swings, whipsaw effects in the equity markets. Now this week, we've got more earnings coming out. We want to hear from Home Depot, from Walmart, again on the consumer, how the consumers are doing. We want to hear also in this month Nvidia, what their expectation is and how their earnings are doing. And most importantly, we've got CPI, inflation this week. So inflation this week, with what the companies are reporting, the weak consumers out there and them lowering prices, we should see CPI and upcoming inflation metrics come in lower, which should pave the path for the US Federal Reserve to again cut rates. But like I said previously, many times in the past, lower inflation doesn't have to do with all of a sudden because companies are happy to lower prices. It's because the consumer is getting weaker. And as the consumer gets weaker and weaker, we're going to see that inflation come down lower and lower. And yes, thus you're going to get those rate cuts. And yes, let's not forget about the jobs, right? We saw the last jobs report come in weaker. The unemployment rate moving up to 4.3%. We have more of these data points to come out, especially next month. It will be interesting to see what the jobs report is then and in the future as well, which would also ignite the Fed to do its rate cuts and maybe hurry up a little bit with its rate cuts if the job market really deteriorates. And we heard that from the Fed, saying that even if inflation is, still sticky, but the jobs are getting worse off, and there's some signs there, a signal that tells us that we need to cut rates to react to weak job market, then they are ready to do so. Basically telling you that once the job market gets weaker and weaker and there's something to worry about, don't worry about inflation. It's coming down because there is something bigger down the road, something worse off that's causing the job market, the unemployment rate to get worse and worse off. So it's going to be interesting this week. We'll have to see what CPI inflation is this week and see the reaction from the markets, see what the Fed has to say in the future, and how is this all going to play out as we get more economic data, more weakness, hear from earnings and from certain companies like Home Depot, Walmart, Nvidia, and so on. Let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified of the next video, and I'll see you guys around. Cheers. Bye.